and welcome to this week's Market Outlook webinar with me, David Jones, in conjunction with Aondo Markets. If you're watching the recorded version of this, it was held live on the 14th of December at 12:30. This is a webinar we do every week, and it's a bit of a look back over the last couple of days, what's been going on in the major markets, FX, indices, and some commodities. And also, a look forward over the next week as to where the opportunities might be. While I'm talking away, I'll just put up the risk warning there, so hopefully you can all read that. I'm running it. I'm not at home at the moment. I'm running this up in Wales on Welsh internet, so I'm hoping that it all works fine. It's been a bit patchy this morning, but hopefully everything should be okay. But for those of you who are here live, if there is the odd glitch now and again, if you let me know, and I'll see what I can do at my end. I've had a couple of weeks off, 2 or 3 weeks off trading, and I've really got back into it again this week. I've done 4 trades so far this week. So during the webinar, I'm going to talk about those as well, just some of the reasoning behind that. And I've done a bit of everything. I've got a currency trade running at the moment. I've done the bond, German bond, and the FTSE and the DAX. And there's been technically some good trades, and technically there's one that was a bit weak. But I'll talk about that as we go through and look at these different markets as well today. But let's crack on. So this is Aondo's trading platform, Trade Hub. So these are their charts, and I thought a good one. We'll start off by looking at a couple of FX pairs. I think the euro is still interesting, euro pound and also euro dollar. And I tweeted about this yesterday. This euro sterling, not much has changed over the last week when we last looked at this, but it's interesting that the levels that we're seeing hold. I talked about these last week, and it's still valid today. If you look at what happened post Brexit for euro sterling, or post the EU referendum, I should say, because we haven't done Brexit yet, have we? So the market clearly rallied, euro strength. Market sold off back to about 82.50, dibbled around for a little bit, and then August, September really got a move on up towards the 92 level. Since then, we've seen quite a major slide from 92 back down to the 83. So we've seen nearly a 900-point drop. But you can see, hopefully, how we're seeing maybe buyers come in again. These are daily candles that we're looking at. So we're seeing buyers come in again over the last week ahead of this 82.50 area. And I do think this whole 82 to 83 area is a really important one for euro sterling. I think while it's above here, the bias remains upwards. So my expectation is maybe, is it still a bit too early? I was saying last week it's maybe a bit too early to be a buyer. We've come down again and held again. I suppose it's a stronger argument for buying euro sterling this time around. But my expectation would be, while these levels hold, for the market to rotate back up and have another look at the 91 area. So in terms of risk rewards, it's an interesting one, because if we were going to do like a medium to longer term trade down here, let's say we're a buyer at 84, where it is now, we've got to stop maybe at 82, a couple of 100 points away. Okay, it's a wide stop, but we're looking at potentially a 700-800 point move upwards. So I do think if you're trading euro sterling, the big levels to watch are the ones just below where we are now. And if I flip it over to the hourlies, you'll see how the market has reversed, pretty sharply off this sort of zone over the last week or so. So I think euro sterling for the medium term traders out there, it's interesting down here, and I would be expecting the market to rally up. If we drew our little downtrend in, what does that look like? I suppose you could argue, well, is that a break? I don't know. I'm not that convinced. You could argue that it's still under a little bit of pressure, so there's maybe not that much of a rush to buy it just yet. But I think it is interesting that we see these levels continue to hold in euro sterling, despite somewhat of the battering euro sterling has taken in recent months. Let's take a look at euro dollar. It's the same story there. I think this is even more of an important chart on euro dollar. So this is what I was talking about last week. We've gone back quite a bit in time here. Let me just zoom it back in a little bit. So euro dollar, all the way through last year, we saw what I thought was a basing pattern in euro dollar. We saw that this big sell-off in 2014 from the highs just shy of 141 down to 105 by January last year. That's a big move. And then all through last year, you can see once we've made that low in Feb, market rally, comes back to it, perfect little sort of bounce trade there at the end of last year, November last year. Sorry, that wasn't Feb, was it? Yeah, it was. Oh, March, Feb, March. Comes back to it there, and the market bounced off. And over the last few weeks, I think I was saying last week, I never thought we'd see the euro back down to these levels again. But once again, you can see what a good job this whole 104.60, 105 area is doing in holding up the price. So for me, that does as well. That adds, that's another reason to be sort of bullish euro dollar down here, or the euro full stop. Because we are back to levels that have continued to hold up the price of the euro. I've flipped this over to an hourly, and you can see. I think you can get maybe a sense of it here over the last few weeks in particular. Whenever we see the market getting a sniff of those low 105 levels, the buyers come back in and bang, up we go. We saw it just, when was that? Early hours, well, very early hours of Monday this week. It looks like Sunday night, Monday morning, down at 105.27, and we're 120 points higher. So for me, I think it's difficult to get too excited about massive targets on the upside for euro dollar. But I think any weakness back below or back towards those low 105s still looks like a buying opportunity. So you've got to be a bit nimble. But again, I think, if looking at this in isolation, it does feel, again, like we're building something of a base for euro dollar. So my expectation would be for us to see, 108.50, 109 before we see a break below 105. So I think it's another interesting argument maybe for euro strength from where we are at the moment. But not much has changed over the last week. We have rallied a bit off those levels. We've come back. Those levels are still holding. Let's take a look at something else we were looking at last week, which again I think is interesting from a medium and a short-term point of view. I talked about this a bit over the webinars, but the euro-Canadian dollar. So it's an interesting one. Not euro-Canadian dollar, sorry, US dollar-Canadian dollar. I think this is always an interesting pair because a lot of it has to do with the price of oil. Canada, again, is very much an oil-driven economy. And maybe that's the reason why we're seeing a bit of US dollar weakness going on here, because we've seen something of a resurgence in the price of oil. But I think it's an interesting one. We do see, if you've never looked at this before, and I think that there are plenty of us who maybe don't look at all the different FX pairs out there, you do see some great trends in the dollar, Canadian dollar. We had a great run for more than a year and a half where we just saw the dollar gain grounds, and then for much of this year, or the first 3 or 4 months of this year I should say, the story was of a declining dollar. Again, a fantastic trend. And since then, since those April lows for dollar Canada, we've seen something of a resurgence, and I have been bullish on this move because we have, we've broken out through previous highs, we've broken through some old highs back here, blah blah blah, nice uptrends, everything's going okay. But we have seen over the last 2 or 3 weeks, we've seen about a 500-point decline in the dollar, Canadian dollar, but it has brought us back to what I think is an interesting point. So I'm getting my buy-in head on. I wouldn't be a buyer just yet on this, but what I'm thinking is, if you take the lows, the May lows in the US dollar, Canadian dollar, and we plonk our trend line on, there we go. Now, I'm not the world's biggest fan of trend lines, and I don't think you should stick to them religiously and say, okay, the market's coming back to the trend line, it should bounce or it should run out of steam. But I will always plonk them on the chart where there is an obvious trend, just to remind me of what that trend is, and I need to be trading with the trend. So if you're a fan of trend lines, looking at dollar, Canadian dollar now, you'd be expecting the bounce, right? Because we're back to that trend line, and I think this is a good trend line. We've seen, we've got 1 touch there, 2, 3, and that for me is worth 0.75 of a touch. So it's a trend line that's held a few times. So we're getting back to that trend, that May trend, so 6-month, 7-month trend in dollar, Canadian dollar. But as ever for me, what are the important ones are the big levels, the big old supports, and it's here. It's 130. So 130 is a big level for me on the dollar, Canadian dollar. We're currently trading at 130.96. We're about 100 points above that level. But I think it's a really interesting one to watch over the next couple of weeks. It might get a bit odd and a bit quiet, because we're coming up to Christmas. But we're getting back to the zone now, back to those previous lows, where if the US dollar is going to turn around its fortunes versus the Canadian dollar, then we're here. Like I say, I wouldn't be a buyer yet because you look on the daily charts. We'll have a look on the hourlies in a minute. It looks like just today we're making another fresh low for this down move that's been in place for a few weeks. So clearly, you know, the bearish sentiment is still out there. Let's flick it over. There we go. You can see it. It's broken. It's broken below the lows of looks like the last couple of days. So it's a market that is still weak. So I'll be in no hurry to buy just yet. But I do think if we, you know, if we get back to here and we see a bit of strength coming in, it's a really interesting risk-reward opportunity, relatively low risk, potentially good reward, to buy into that trend, looking for the market, bang, to move its way over the weeks ahead, back up to 136. So I think that's a really interesting one to watch over the next few days, dollar, Canadian dollar. So I wouldn't be buying it just yet, but let's see how it performs in the weeks ahead. I think that's one we'll keep coming back to. Let's take a look at some stock markets. Let's mix it up a little bit. I'll talk about a trade I did. The first trade I've done for a few weeks actually, because I've been, like I said, I've been away up here in Wales a bit, sorting out some family stuff. But let's start with the DAX, the German 30. I highlighted this last week because just last week the DAX was breaking out. So we'd had this level on the DAX, 10.8. 10.820 to 10.850, and you can see just what a great job this had done all the way through the summer of capping any rallies. So we had numerous attempts on this level to try and break it, and the buyers just gave up. You know, the bulls folded up at these levels up here. But just last week when we were doing this, December, was it the 7th? We were doing here. The market was breaking through, and I said I'm always nervous about buying the first breakout, but because it had moved so far. It looked like a valid breakout, and what's the market done since? It just carried on powering up. You know, so these are major breaks that we've seen on the DAX, which is not surprising, of course, considering what we've seen in US markets. You know, we've got the Dow. I'm not going to mention. I said I wouldn't mention the Dow 20,000, but you know, we're not far away. This is bullish. You know, so for me, the default position at the moment on the DAX to be a buyer, although you know there are some problems up there. 11,434 was quite a bit of a hurdle from just over a year ago, November last year. So I don't think it's going to be plain sailing on the DAX, but that break through that level was a big one. But I did a trade this week on the DAX on Monday morning, and the rationale behind it was perfectly logical. But where I fell over was I put my stop too close, and I'll show you the thinking behind it. But this was the trade I did on the DAX. So this is a 10-minute chart on the DAX, and I think it's a good lesson or a good reminder now and again to listen to what I say about, and I should listen to what I say about the importance of big levels. You know, clearly we'd had that bullish move last week with the DAX breaking out, with that really weird move on Sunday nights. Lots of indices surged higher on Sunday night. I think it was driven by the price of oil. We saw that. We'll have a look at oil in a minute, but we saw oil gap higher on Sunday, and the market was just sold off into Monday morning. So this is sort of 7 o'clock, 7 to 8 o'clock Monday morning. UK time. Now, for me, you know, if the trend is up and the market's selling off, if the market's been going up for days and weeks, and we have a day where the market sells off, then that's a buying opportunity. But it was just sort of sailing lower all the time in the early trade, and then about 9:30, it made a low. The DAX. Let me just zoom back in because I can remember where I bought. Made a low, pushed higher, and I thought if it comes back a bit, I just want to buy. I just want to be a buyer. So it came back, made another low again. About 2 o'clock in the afternoon, and I ended up buying. I think I ended up buying about here, 11,180, let's say, on the DAX. And I put my stop loss. I think I got a little bit overexcited, thinking, "Oh, the base is in. We're going to go all the way back up to 11,300." So I bought, and I put my stop loss under this sort of little fiddly low from about 20 past 10 in the morning. So I had, I think, maybe a 35, 40 point stop loss on it. The market moved a little bit in my favour, maybe 20, 30 points in my favour. Well, then tailed off, as it often does. And of course, what happens overnight? Not overnight. It's about 11 o'clock at night. I think it would have been just down here. I got stopped out. So I got stopped out for a small loss. The market trickled a little bit sideways, and where are we now? All the way up here. So we've been as high. Basically, it's been 150 points in profit without me. And what I should have done, and I'm going to put this down, I'm putting this down to the fact that I'd had a couple of weeks off, so I was out of practice. The logical place for the stop loss, as ever, was below the low of the previous day, or be at least below of this day. Yeah, not some intraday stop. So if I had, with my Harry Hindsight hat on, if I'd had my stop loss the other side of that, I'd have been in the trade. So that's the trade. I've done 4 trades this week, and that's the trade that I'm disappointed with, because the execution was okay, my forecast was right, but my stop loss was far too tight. So I got taken out. But I still be a buyer of the DAX, based on what's going on in this market at the moment, because it is so strong. I don't know where the levels are now. That's the move we've seen over the last week. These are the lows. This is where I was buying in on Monday. So I think that's the obvious first support. It's the low for this week, around about 11,145. The market's 115 points above that at the moment. So for me, if we saw it tail off the next couple of days, a bit of strength coming back in again, that would be the first place to stop. But I think if we do see stock markets sell off, there are so many potential support levels. So I think it's very difficult not to be still bullish on stock markets now. They have come a long way, yes. And when we look at US stock markets in particular, we'll see that. But these markets are still strong. They just continue to move higher and higher. Let's take a look at the FTSE, because to contrast this with the DAX trade, this is the best trade I've done this week. But before we have a look at that, let's have a look on the dailies on the FTSE. The FTSE is a bit messier than the DAX. We've got the DAX breaking out through that resistance barrier. We've got US markets. It feels like continually setting all-time highs. The FTSE is a little bit scrappier. Really, and that doesn't mean there aren't opportunities, but I don't think it's quite as clear cut. We've got these highs from October still. Where are we? About 170 points away from those highs. We've got these lows, and we talked about this level in the past. This whole 65.50 to 66.60 area, still important support. At the moment, we're sort of in the middle, so it's a bit of an odd one. But I still think there are opportunities there. But I think if you were a medium-term trader looking for a trade over many days, maybe you're better off looking at the US markets probably than the FTSE at the moment. But my trade on the FTSE is a similar sort of setup, to be honest, to the one on the DAX. It was yesterday morning. Was it yesterday morning? Yeah, it was yesterday morning. And again, we'd had that move on. We saw strength on Friday in stock markets. We had that really weird move on Sunday night. And like the DAX, we saw weakness on the FTSE. So the FTSE sold off for all of Monday. So the FTSE was really in retreat for all of Monday. And I thought it was odd because other markets have been strong. So I thought, well, if we see a bit of FTSE strength early Monday morning during the official trading hours down about here, then maybe there's an opportunity. So I bought the FTSE fairly early on. I think it was about 20 past 8 on Monday. At about 68.87, I think was the level. And we'd had the low for the day, which had only been set 20 minutes earlier. But the low from yesterday was here. And also, what I did this time was the low from way back here, so the low sort of late in the afternoon, December the 7th. So I put my stop loss maybe 30 points away, 30, 35 points away. And basically looking for a move, back up to these sort of levels. The market, as it often did, just chopped around for a little bit, then got to move on, and it ended up being a really easy trade. And perfect trades like this, when the market starts to move in your favor, and you can just trail the stop loss up. And I ended up coming out, I think, just towards the end of the day for about, I think it's about 85 points profit in the end. But the point here is, is just looking at, for me, the important thing is to look at obvious big levels where I can set my stop loss. And for me, that one's worked out pretty well. At the moment, I don't know what I do on the FTSE. If we're back down here, if we're back down below 6,900, I think it looks like a good short-term opportunity. But here in the middle, I've really not too much interest. So I think DAX obviously still bullish. FTSE is a little bit just choppy. Let's have a quick look at the US markets, because there are still these obvious trends in place. We'd not want to go against these trends. Let's just remind ourselves where we've come. I think it's been really odd since the US election. We had those outrageous moves overnight, and then the market wrong footing. I think completely what everyone was expecting if Trump got in, to see the markets rally. And look where we are. We're what, nearly 2,500 points higher than the overnight low from the election night. I mean, that is a phenomenal move. What's that? That's a 15% move off the lows we've had in a little over a month. Absolutely incredible. But you can see yesterday, these are the daily candles on the Dow from yesterday. Yet again, fresh all-time highs. Let's flip it over to the hourlies, and we'll see. There's some of the move over the last few weeks, and you can see it's a market that just doesn't look back. And I think if you're short-term trading markets like this, for me, it comes back to that thing, the previous day's high and low. So if we zoom this out a little bit, so this is the week so far. So what are the lows? The lows for the week on the Dow, what's that, 9:30 Monday morning, UK time, about 19,750. And then we've got pockets of support left from official trading, in-hours trading, 19,760. December the 13th, yesterday, what was the official in-hours low yesterday? Looks around about these levels, about 3:30 UK time. So 19,850. If we saw the market, the Dow, if you were trading the Dow this afternoon and saw the market sell off towards 19,850, then for me, that's the first place I'd be looking for a buying opportunity, because I'm going to put my stop underneath the low of the day before. These markets are incredibly strong at the moment. But I think one word of caution, and I said I wouldn't mention this, I'm going to mention it again, this whole Dow 20,000 thing, we came within 47 points of it yesterday. It's something of I think a market maxim. Whenever anyone expects something to happen and they think it's a shoo-in, it's going to happen, the market will do completely the opposite. So let's just see what happens. But already I think it felt like every other tweet yesterday on Twitter was about the Dow hitting 20,000. But let's see what happens. But I think the first level to watch this afternoon is going to be if we push back to the lows for yesterday, which is this level here, so 19,850, near enough. So if we push back and bounced off there, that to me looks like a low risk buying opportunity. And even if that gets taken out, there are, the levels back here. There are levels everywhere because this market has been so strong. Quick look at the S&P, and then we'll go back and have a look at the pound against the dollar. I've got a trade open at the moment, which isn't a good one actually. I did it this morning, but I'll talk about it in a minute. Where's the S&P? The S&P, clearly, it's a similar sort of picture to the Dow, isn't it? It's a market that has just ramped up. We've had, look at this, 1, 2, 3, 4, 5, 6 days on the trot, the market went up. It went down on Monday, I suppose, bang, out to fresh highs. Again, yesterday, I think, like the Dow, would not want to be too short of these markets for too long. Clearly, for the fans of the squiggly lines, the oscillators at the bottom, these markets are very overbought. But we in strong trends, like back here actually, whenever that was, March this year, in strong trends, we can see markets stay overbought for quite some time before they give it up. So something that was maybe adding to the bearish argument back here was this idea of this bearish divergence. I'm not the world's biggest fan of oscillators, overbought, oversold, but when we have a divergence, this is the RSI we're looking at. When the market moves to a high, moves higher still, but the RSI is really falling, it can be a big warning that maybe the market's running out of steam. We haven't even got that at the moment. When the S&P's RSI went overbought here, okay, the market did actually sell off for about a week. It's pushed higher, but the RSI is pushed higher, so we don't even have a sniff of bearish divergence, even though the market's overbought. So it's interesting, I think, at these levels, but I would still be inclined to be a buyer on dips, rather than think, oh, that's it, it's time for the 15% decline. These markets are still very strong. Let's go back and flip back onto pound against the dollar, I think, then we'll take a look at what gold and oil have been up to. So pound against the dollar, I think my view from last week is still, I think it's still valid, that we still have, I think something of, I pressed the wrong thing here, something of a recovery trend going on in pound against the dollar. If we can flip it over, and we've got some big levels to watch on the upside. So this is, what's this, the last 10 months or so, pound against the dollar. Clearly there's the referendum moves, there's that funny flash crash thing we had. But since then, I think the argument for like an ever so gentle uptrend, I think, in pound against the dollar is still valid. If we take it off maybe these lows here, looks something like that, I suppose. And then I think if we flip over to the hourlies, we'll see a better example. So, I don't think we're going back to 150 against the dollar anytime soon, but I do think the argument is still to be a buyer of pound against the dollar, because our little trend looks something like that. So that's going back to November the 18th. So that's what, about 3 weeks pound against the dollar trend. So it's pushed out to 127.50, 127.60-ish. It's sold off, and again, it's got a bit messy. You know, it sold off. I think a week ago. I remember I watched back the webinar this morning just to try and catch up with what I was talking about a week ago. And a week ago, I said if there was one trade I'd do at the moment, it's buying pound against the dollar, and it would have been back here-ish. When was it? The 7th of December. So it would have been lunchtime. Here, this sort of area, 126, and the market did move higher up to 126.90, and then sold off. And I was talking about having stops under these levels, and I think I'd have been just about still in the trades. I don't think I'd have been stopped out. I've had my stop probably far away. It did faff around below that 125.60 level, but it looks like at least it didn't go too far. So we'll see. But for me, you know, this whole 125.40 to 125.70 area has been an important level of support for pound against the dollar. So for me, my bias would be for the market, you know, to push back up 127.60, maybe even 128. But then I think we have to refer back to the daily charts, you know, and again, I think 128, it could be an interesting area, you know, because it was the low, it was the post-EU referendum low. And I must admit, when we saw that's 128 low back here, I thought that's it. The low's in. The low's in now. It's going to be a story of recovery. And it came back to it in August, tested it, and the market rallied 600 points and then just went crashing through. So I think it will be interesting if it can regain this 128 level. I think a lot of people may be forced to maybe revise their perception of what the next few months hold for the pound. It's a big if, because it is a barrier, 128. So let's see what happens. But I think that's the level to watch. We have had support, these sort of mid 125s for the pound that have held well. So short to medium term, I'm expecting a push up, but let's see if 128 can be cracked. I'll show you the trade. The trade I did this morning, I must admit, it's a little. The FTSE trade I did was good. I did a trade on the bond as well this week that was good in terms of technical setup. My trade on the pound this morning was maybe a little bit itchy fingers, but I think like all the others, you know, we'd seen the move yesterday by the pound out to a fresh recovery high for the short-term trend. The market had come crashing down a little bit yesterday afternoon, crashing down a bit overnight, and traded as low as 126.40 overnight, and I bought in at 126.60 today, which I thought was a little bit of a gamble for a couple of reasons, because there were unemployment numbers out this morning at 9:30, and there is the Fed decision tonight. So big decision tonight from the US Central Bank, the Federal Reserve, with many people thinking it's a shoe-in. We're going to see a 0.25% rise in interest rates tonight. We'll find out a bit later on. So we could see a fair bit of volatility. But I thought, well, look, the trend is still up for the pound. It's been knocked back for the day. That's got to be a buying opportunity. So what I did, again, I don't think it was the best stop in the world, but I put my stop below the overnight low. So the overnight low was 1 o'clock this morning, 126.40. So my stop's at 126.30. So I narrowly avoided being stopped out, and I'm about 15 points in profit, but I really need the market to move 30, 40 points in my favour up to here, and I'll move the stop to break even. So it would be quite handy if it moved up here this afternoon. I can have a break even stop, because there could well be a lot of volatility on this Fed interest rate rise this evening. But that trade aside, you know, for me, pound against the US dollar, the bias is still up. The trend from recent weeks is still up. I think it's going to go back and have a look at 128, and that is a really big level. So let's see what happens. For me, I would change my view. If we lose the 125.40 area, if it starts to break below there, I think the bullish argument for the pound goes out the window. But for now, while we're holding above there, everything's okay. Gold. I think last week I said I've finally thrown in the towel on my bullish view that I've had all year on gold, because we broke that level. We broke these big levels, the 1200 levels on gold, and nothing much, you know, nothing's happened to change that over the last week. The market has slid a bit lower. I still think we'll see, like I was saying last week, I think 1500 before 900, but I wouldn't be in a hurry to buy gold just yet. The trend is still down. There's lots of support coming in down at these levels from the summer of last year and this time last year. But for me, it's still weak, the price of gold. So I think that there's still pressure on the gold price for now. So even though I do think medium to longer term, it has broken the downtrend from the last few years, I think the pressure is still down. And then finally, before we sort of recap on stuff to watch in the week ahead, is of course my old nemesis, the oil price. I hate the price of oil. It's just it just seems to do completely the opposite of whatever I think it's going to do. So I don't trade it very often. But we had this interesting move. This interesting move on Sunday. You can see again. This is what contract is this? This is January crude oil. You can see what a problem the 52, 53, that sort of area was for the price of oil. Rallied up with that bounce back off those massive lows at 26 at the beginning of the year. Price of oil doubled then by May. That's a heck of a move. January to May, price of a major commodity like oil doubles. Stalls at 52, has another run at it in September and again in October. Can't break it, but doesn't really break any important supports either. And then because of I think breaking news over the weekend, we've surged out. Surged out on Friday night, on Sunday night, sorry, cracks that level and comes off. So for me, and of course you should do exactly the opposite of this. I think this does suggest we could be seeing the next leg higher in the price of oil. The only question is, it's been coming off the last couple of days. How far is it going to come off before it legs its way higher again? For me, if I wanted to be a buyer of oil and I seriously think, okay, this is the start of the next big swing higher in oil, I would want my stop loss at the very least below these old lows from just a week ago. So below 49.60 lows, those sort of level. The RSI does tie up with a bit of strength coming in, if you want to believe the squiggles. So for me, it's an interesting one to keep an eye on. And if this breakout we've seen is going to be a valid one, then really it should not give up a massive amount of gains from here. It should not, it should not go back and be breaking all these supports. So I think 48 to 49 on oil is fairly critical if it's going to be a valid breakout. So let's see. I think it's an interesting one. But I'm not going to trade it because I hate it, but I would be tempted if we saw one day of strength, just to turn this weakness round after the breakout. I'd be tempted to be a buyer with the stop, giving it a fair bit of wiggle room and to see if we can go back up through 54, 55 and then start moving higher. But I do think, that break on Sunday, it could well be the start of a much bigger move higher. Let's see what happens. Let's see where we are. We'll come back in a week's time. And that'll be $28 a barrel or something. But I think the interesting ones to watch, just to recap, I think probably the most immediate ones to watch, it might be pound against the dollar, because 128 is a level and the trend is still up. Euro dollar is still the same as it was, big levels holding on euro dollar, those historical 105 levels. Euro sterling is interesting. There's maybe more of an argument to be a buyer of euro sterling today than there was a week ago, but technically, I think for the chart geeks like me, it's that dollar Canada. It's the because we've sort of coming back to that trend line that's been in place for much of this year. There we go, coming up to the 130s. I think that's a really interesting market to watch, and of course, US stock markets still incredibly strong. Would be a buyer on dips for those, and unless we start breaking major supports, but it's gone so far, those big supports are so far behind. So stock markets still bullish, but technically and geekily, dollar Canada I think is the interesting one over all sorts of time frames, and that 130 level is the really big level for this. I think it's going to be an interesting one to keep an eye on. We will start wrapping things up there. As I'm in Wales, I'm off to my nephew's carol service this afternoon, which is all going to be completely in Welsh, so I'm going to be embracing my culture. So, but if you have any questions, drop me an email. Email address is david@tradeafter.com. I do some stuff with Eondo on social trading as well. We do webinars a couple of times a month on social trading where you copy other traders, and there's a bit more information on that on part of my website, tradeafter.com. So if you want to find out about that, go there. But for other stuff, you follow me on Twitter. If there's any interesting chart setups, I'll normally tweet them out. But for now, hopefully it's all worked okay today. I think it's all been okay. We'll wrap things up there. I hope you have a good week, and we'll do it all again next Wednesday. I think that's the last one of the year before we start again in January. So thanks very much, and have a good afternoon.